Hey, welcome back to another portfolio update. So, currently broke the 10,000 mark. I'm pretty satisfied with myself. I am trying to break 20,000 by the end of the month, and it's already December. So, I wouldn't say slim chances, but hey, never say never, right? So, of course, you can see I've added a little bit more to my portfolio in terms of cash. Will I be keeping this amount as it is? Probably not. I'm just keeping my powder dry, looking for some, next healthy investments that I think will be favorable in terms of, next year. I think we're on to a very strong bull run to come 2024. Of course, that will be a whole different video, whatnot. But in the last month, the market has done a little bit, nice little pullback for myself. Haven't seen too much of a gain because I haven't really been investing that much money in this portfolio, more of in my other ones. But nonetheless, it's in the green, and that's all we can really ask for. So no complaints there. Bitcoin has done extremely well this year. And, although it's, a lot of people have claimed that it's, the crypto winter or whatever you call it. I don't really think we're in a crypto winter, especially if Bitcoin's up over 155% year to date. It's not by mistake, and it's really starting to make up for all of its losses, from last year. And it's honestly exciting. So I don't really know what's to come for Bitcoin, but as you can tell, I've had just a little bit here, not too much, and we've seen a 50% plus gain. Is this anything to brag about? Not really, because I don't really have too much invested into crypto. But now I think we're starting to see a strong sense of FOMO. Back 2 years ago when Bitcoin skyrocketed, it was like, in the high $60,000 range, nearly broke 70,000. Um, it literally sank, and after that it came back extremely strong. So I think there's a strong sense of people who are, hey, I'm in a position where it's fear of missing out, and they want to be a part of it. But aside from that, Bitcoin rallying has done so much for not just itself and cryptocurrency, but also for other stocks like Coinbase, MicroStrategy, and other companies that own Bitcoin. So they're starting to see their returns level out, which is pretty good to see. But we still have a ways to go before we are out of the woods. On another note, I have been adding more to SPY. I know this is very general. A lot of people invest into SPY. I think this is clearly a no-brainer. Short and sweet, just been adding basically majority of my money into this position. I do think I will start to leverage out, level out my other investments and whatnot. So where SPY will remain at the top of my holdings list, but I will want to beef up my other volume and numbers with my other tech stocks. On another note, considering SPY had sold off, last year and it completely just boom bottomed out. I think it has come back substantially well, considering it's had a lot of ups and downs. It's pretty volatile, in the last year. We've had a lot going on, and I don't think it's gonna really, what's the word? I would say as of right now, it's on a really good track, to break its previous all-time highs. But keeping in mind, we are going into an election year, so there will be a lot of volatility in my mind. But I do think that'll also be a good thing. I think there will be a significant boost in the economy. But of course, we still have a lot of things to tackle. We have inflation, our debt, all that good stuff. We have mortgage crises across the US, which I will go over in a completely different video. But as of right now, we're doing well, so there's no complaints there. And another thing too, which I don't know if I'm really happy about it, but I think it's a good step forward for the S&P 500 is that Uber is joining, the big 500 as I call it. They're kicking out, one of the other stocks, and it's being added. So aside from that, Uber has had such a long history of fighting against regulations and whatnot, and conspiracies of paying off politicians, which obviously, why would a politician ever be paid off? It makes no sense. But on another note, I'm glad Uber is taking this next step because now that they're going to be joining the S&P 500, they're going to be held to a lot higher standard, and there's a lot more strict, I wouldn't say regulations, but stipulations as to staying on the big 500 list. So I'm really excited to see where Uber goes with this. It does seem like they are pretty much at all-time highs for the most part. They're just about there. So not quite, but from where they were last year, they came back fairly strong. So I do think there's a lot of potential for Uber, considering now they're pretty much dominating, especially for a publicly traded stock. They're dominating, the rideshare program. So unless another top dog wants to break into that niche like Amazon, I'm sure they could do anything at this point, or even Apple. Then that would be pretty cool to see the competition, flow against each other. On another note, though, Apple has hit basically, if I'm not mistaken, a 3-month high And this is exciting because I do hold Apple in multiple portfolios, but specifically this one, what really threw me off was that, Apple has had such a significant run up this whole entire year. And then it completely just sold off, right? Obviously, there's a lot of volatility because we've had global tensions with other countries like China. We don't know what's going to happen with Taiwan. I'm hoping to God that Taiwan does not get invaded by China, because that would, I don't want to say cripple, but it would put a big hurt on our chip supply. Um, I would like to see companies either pull out of China, not to be political, but just pull out of China. And how Apple's doing it, they're moving operations to India, and I think India is at the forefront of something huge technological wise. They have so much opportunity. They just need the funding, opportunity, and the time, and all three will play out as a trifecta, and it'll just be good in general. But as of right now, I am beefing up my Apple shares. Um, Prior to like last year, I know that ironically enough, when I was beefing up heavily on Apple, I was buying between like the 125 and $145 range, and now Apple's sitting at almost $200. So it's been good in most of my portfolios. I can't really disagree with this. And yeah, I think we're going to do pretty well on this, no doubt. A little shocker too, and this is ironic. One of my coworkers got her Apple, whatever you call this, Apple card compromised, and they charged a lot of money on her card, but luckily it was all worked out, and fortunately she didn't have to pay that amount. But I could be mistaken. Apple, card connects to like your checking account. I use, a credit card, because if there's any disputes, it's a credit card. It's a lot easier to dispute than a debit card. Although Apple's, card is supposed to be, I mean, sorry, this is a credit card, but although it's supposed to be extremely secure, for some reason, I've been seeing a lot of Apple cards getting hacked, or their information stolen. And another shocker too is that, Goldman Sachs is being replaced by Chase, for their partner. And it's funny because one of my good friends who is an analyst, he said, "Hey, what company do you think is going to step in to partner with Apple?" I said, "Probably Chase Bank, because they have a really good reputation and they're pretty quick with things and they have a lot of money, power, and they're one of the biggest." And I think that's a pretty obvious guess, and it was. So there's really no shocker there. But while Apple and Goldman Sachs are basically splitting up, I think that Chase is going to do a fantastic job stepping in here and basically just taking the reins, because Chase has done such a great job with a lot of things in terms of, as we've seen this past year and the year prior, with a lot of smaller banks defaulting and whatnot. They just came in, swooped in, and just bought them out, basically saved them. So I like to see that Chase is stepping in here and helping out one of the top tech companies in the world here, because it's going to be a powerful bond, hopefully, and hopefully for a long time. On another note, I have been increasing my position slowly but surely. I found this new ETF called Schwab US Large Cap Growth ETF. The reason why I like this ETF so much, and I'm not going to get technical, but the reason why, not because looking at the graph it's outperformed this year, compared to other stocks, but because it has a large cap holding of tech stocks at such a, what I would consider such a bargain of a price. If you think about it, less than $80 a share, right? Why would I want to buy and put all my money into SPY? Now, keep in mind, SPY is 500 stocks, right? Follows 500 stocks, $458 a share. You're not getting that much volume, for how much you're buying. SPY would essentially, have to go up a dollar for you to make a dollar if you owned a stock, or a share. In this case, for $80 a share, I can get a lot of volume out of that. So I'm probably going to be increasing my position nonetheless, and I have read into the holdings list of this, and I am fairly impressed, not only with its performance and whatnot, but more of the holdings. And obviously, majority is Apple, and then going down the list. But Apple, Microsoft has basically been leveraging the majority of growth this year, of course, with NVIDIA as well. Can't forget about that. But you can tell this is heavily tech dominated, and then at the bottom you have your pharmaceutical and you have your healthcare groups and whatnot, and those have done extremely well this year alone. So obviously it's an informational technology, ETF and whatnot, and then usually in second place is healthcare. But for the most part, I do think this is going to be a long-term winner, and this is something I will most likely be even adding to my Roth IRA. So I don't think I can really be disappointed. Other than that, I hope you guys enjoyed the video. Hope you guys took some form of benefit from this. Stay tuned for the next portfolio update. And as always, happy trading.